this little baby. So let's go through the adjustments. And again, I say to you, do not make accounting difficult for yourself. What you do is you always, if you see it's cash, you go money in, CRJ. Money out, CPJ. Keep it simple. Keep it simple. Okay. So, now they say, cash sales as per CRT, the T just stands for cash register tape. It's the same thing as a cash register roll. Same thing. Amounted to so much, these goods had so much on cost price. So I can see this is money in. So I go to the CRJ. It is sales. Now I want to ask you, did we receive the cash? Yes, because they say it's cash sales. They don't say it's credit card sales. Okay. Credit card sales or even debit card sales is directly into the bank. But at the moment they say cash, it means you got the rands and the cents. So that 31.5 will go into analysis. It's a cash register tape. If you wrote roll, CRT, nothing wrong with that. Okay. 31.5. Okay. Now I see, okay, they say markup 25%. And all of this happened 28 February. Yes. Because I first want to see if because they say all those transactions are on the 28th, I first want to make sure if there isn't other cash received, because I'm only going to go to the bank once a day. So maybe there's other cash and then I add them and take it to the bank once. Yeah, so the receipt, the analysis of receipts is like your cash register. It's your till. So now I get money for sales, 31.5. But Nunu comes and she pays me my rent. But she pays me cash, so I add it. So now I take all of that as one amount to the bank. I'm not going to run to the bank after every transaction. This is important because in the end you want to compare your CRJ with the bank statement. So on the bank statement it will show the amount that you total. So you want to see that same amount into your books as well. Okay. I'm going to explain something to you called cash rolling. Ne? Let me explain to you why we do it. And I need you to really pay attention. So there's a type of fraud or stealing. They call it cash rolling. So I've got my CRJ. In my CRJ, I have an analysis of receipts and I have a bank. Okay. Then I also have a bank statement. So let's say this is day 1. I had sales for 20 Rand. I had rent for 10 Rand. So I take to the bank 30 Rand. Then I'm physically going to take that 30 Rand to ABSA. And ABSA is going to show it as a plus 30. Okay. Next day, maybe there's a direct deposit of 10. So now I just put it directly into the bank. You see? Doesn't go through analysis because it was a direct deposit. But can you see, I want to keep my books in sync with the bank's books. So let's say day 3 again I had sales for 70 Rand. It's the only thing, I take it to the bank, 70 Rand. And here they will say it's 1, 2, 3. Now when I do internal control, the end of the month, I see, oh, 30 Rand, 30 Rand, 10 Rand, 10 Rand, 70 Rand, 70 Rand. Nothing is missing. It's an easy way to keep control of my cash. Now, let's say we did it like this. Here's my bank statement. So on day one, I made 30 rand, but I took 5 rand, ne? Or let's say I took 15 rand to go buy chocolate, right? So I only deposit 15 rand. Okay. Day 2, this 10 rand is direct. Day 3, from that 70, now I am going to give back the 15, but I need 30 rand for taxi money. So I am going to pay in 45 rand. Now can you see what's the difference here? Here I can check that all my money's been paid in. Here, can you see there's no correlation? There's no correlation. So what can happen? Would we notice if that 15 rand that you took there to buy chocolate, if we never pay it in again, if we never put it back? Is there any way for me to notice that you pay back the 15? No. So can you see, by not depositing all your cash every day, ne? There's no way for you to control that the cashier doesn't put some of the money, or the guy going to the bank doesn't put some of the money in his pocket. And we call this process cash rolling, because we deposit the cash in such a way, we roll the cash in such a way that you cannot pick up if someone took something and never put it back. That's the concept of cash rolling. I see a question. Okay, so now I need to calculate the cost of sales. They say the markup is 25%, right? Is that right? You guys please wake up. Yes, 25%. So I say 31 times 100 divided 125, and it gives me 2. Just say 1, 2, 3, 4. I think you must be quiet. Can you please tell me 25? Thank you. Okay, are you sure, baby? You had to say times 100 divided 125 with the 31500. Okay, may I continue, or are we going to be... Okay, so we established it's 200. Let's go on to the next transaction. Next one I see. We received money from Bow Bank, ne, for a loan granted to us. Now, if we received money from them, we haven't paid interest rate yet, ne? So we just received the 25,000 from Bow Bank. And now I'm going to put it directly into bank. Why? Because the bank is not going to bring me the money to the shop. I put it in the cash register, then I go back to the bank and deposit it. That's most now stupid. The bank is just going to make a transfer into my account, 25,000 rand. Okay, now in the sundry, it will be loan, Bow Bank. Why? You have to write the name, because it could be that you have a loan at another bank as well, or you want to make a loan at another bank at a later stage. Okay, and this will be a bank statement, because that's where I will get the info. Next one. We buy trading inventory, which is trading stock, and we pay with a EFT 41. So I see in my CPJ it's money out. 28th, we buy from Tembi Suppliers. 41, and trading stock is trading inventory, ne? Okay. We pay, so again CPJ, DHL for transporting the merchandise, which is another word for trading stock. Remember, trading stock has got a lot of words. They can say goods, merchandise, stock, inventory, trading inventory, but when we do the T, it's trading stock. And it's 3,600, and it's also a EFT. Right, so it's also a bank statement, DHL, and because it's transport to me, I'm going to include it in the price of that which is delivered. What was delivered? Stock. So I'm going to put it in my stock. We received a direct deposit, so this is CRJ. And they say it's direct, meaning I'm not going to use analysis. From RL Investment. So let me just write it before I forget. Bank statement, RL Investments. Okay. Now they say, being the proceeds of the fixed deposit which matured today. Included in the deposit was interest for 12 months for 4 months. For 12% per year for 4 months. So I'm going to write here. I'm going to have two amounts. I'm going to have fixed deposit from RL Investments. And I'm also going to have interest on fixed deposit. Okay. Now let's see. What's the amount going to be? Now if I look here, can you see they didn't tell me how much the fixed deposit is. But if I go back to the start of the exercise, can you see there's a balance? So my fixed deposit is 30,000. Right. What would my interest be? So I'm going to say 30,000. They say it's 12%. Ne? Is that right? And it's for how many months? 4. So can you see I'm going to say 4 out of 12. Let me explain it. This 12% is per year. How many months in a year? 12. So if I calculate that, I will get the interest for a year. So if I divide it by 12, I will get the interest for the month. How many months am I getting? 4. So this gives me what? 1,200. How much? 1,200. So how much is the bank paying into my account? 31,200. And why don't I separate it here? Why don't I separate it inside the bank like I do in the sundry? Is there a reason? Yes. That's it. This is the amount that's going to appear on my bank statement. They're not going to say 30,000 fixed deposit, 1, 2 interest. They're just going to say interest and fixed deposit. This is the total they pay into my account. They're not going to pay into separate accounts. Or they might just, most probably, they're just going to say fixed deposit. That's all they're going to say. And you have to deduct from that the interest. Okay. Is everybody sharp? Okay. Now they say the February bank statement arrived from Bob Bank with the following charges. Interest on an unfavorable balance. So meaning CPJ, nay. So CPJ is going to be Bob Bank. And it's going to be 26. And the interest on overdraft, interest on debit balance, interest on unfavorable balance, all of them. I think this one is the shortest to write. I know I said you don't have to do it, but I just want to show you this one. Okay? The payment on loan 1,500, which includes 500 interest on loan. So I would do that in the payments journal, right? So let's say it's also at Bob Bank. I will say Bob Bank, 1,005. In sundry, I'm going to say 1,000. Loan Bob Bank, you see. And 500 interest on loan. This is just an example. It's not part of the exercise. I just want to show you how you would do it when there's interest on a loan. Okay, and since that's the final, we need to total. So we're just going to add all of them. And with the CRJ, now I see, oh, it's the end of the day, so now I'm going to the bank and I take the 31.5 to the bank. Can you see I waited to finish the day to see if I didn't receive any other cash. And now, important, when I total the CRJ, I do not total analysis, because analysis is already totaled to the bank. I'm not going to double roll. Okay, so let's start.